Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York, and in today's video we're going to do something a little different. We're going to focus on Airbnb, its recent earnings announcement, or release for that matter, how it affects the economy as a whole, or how it plays into the general theme of the consumer slowdown, and whether the stock is a buy long-term or short-term, or if you should sell it. So if you're into economics, finance, making money, the stock market, things of that nature, the economy, please be sure to like, comment, and subscribe. And without further ado, let's get into it. So basically last week, so I'm a week behind, I apologize, been a little busy. Shares of Airbnb plummeted in pre-market trading in New York after the company reported second quarter earnings falling short of Wall Street's expectations and issued rising recession risks in the U.S. with the consumer downturn worsening for the working and middle class due to elevated inflation and high interest rates. So what I'd like to point out first and foremost is I don't want to say it's really high interest rates, right? It is. But the reason we have high interest rates is because we've had low inflation rates for far too long. And the low inflation rates never, the low interest rates never should have been this low, period. And if you look back historically, interest rates are actually still too high. Unfortunately or fortunately, depending on how you'd like to look at it, they are going to go down. The Fed will cut in September. And, who knows what's going to happen after that, especially once inflation starts to kick up again, which it will. But moving along, let's, get back into the stock. Bookings increased 8.7% in the second quarter to 125 million. And, to point out that, if you've watched my other videos, you know the deal. I believe we're in a recession. I generally do entire industries or the economy as a whole. And like I said, this video, we're just doing Airbnb. But it plays into the general theme that we're in a consumer downturn. And vacation spending is some of the first discretionary spending households cut to preserve cash, right? So if you have a choice to stay at home or go on a vacation, which due to low interest rates and now high interest rates and inflation is prohibitively expensive, that's like an easy thing to say, sorry kids, we're staying at home, we're not going on vacation. I personally travel a little more during the summer. This summer has been a little different than most. So I only went to Cape Cod, and just like whether I went to Cape Cod, Myrtle Beach, California, Florida, Texas, any other place, everything is just exceptionally expensive and through the roof. So to Airbnb's credit, revenue actually did increase by 11%. Their net income went down substantially though, which we're going to get into that in a little bit. And really the core issue here is that they're saying third quarter estimates reveal sequential moderation in booking growth, an indication of consumers pulling back. And like I said before, Airbnb's shares plunged 15%. And with that being said, RBC Capital Markets analyst led by Brian Eckerson commented Airbnb's outlook that it will likely only further stoke the soft consumer thesis. So basically, the stock pulled back dramatically. It actually hit a market cap of $70 billion, which is actually the cheapest that it's ever been, historically speaking. So if you're looking for a deal, there might be one here. And, basically, the once thriving vacation rental giant is showing signals of trouble as it sees signs of slowing demand from U.S. customers, as many travelers in recent months have turned to tried and tested hotels and motels for their vacation stays, or they've cut back altogether. And their net income plummeted to $555 million versus $650 million reported in the same quarter last year. And, let's get into the upside of Airbnb, right? I think they were founded in 2008. Now they're a $70 billion, $80 billion company. They've helped so many people, I know people who actually have 2-3 properties that live off of it. Yes, it's a lot of work, but Airbnb has helped so many people make ends meet. And listen, they've also received a lot of criticism about bubbles that they've created from landlords and realtors buying up properties. What's your experience with Airbnb? Have you ever used it? Have they created a bubble in your area? Have you had a positive experience or a negative experience with them? I can tell you, I've personally never used an Airbnb. I don't plan on using an Airbnb anytime soon unless it's something exceptional and very comfortable and I'm the only well, obviously I'm there with, my girlfriend and family. But otherwise, it kind of skeeves me out, to be honest. And listen, I'm sure I'm wrong. There's millions upon millions of people who do use it, but definitely not my cup of tea. So with that being said, they're one of the biggest disruptors of the mobile era, right? The company has transformed the hotel and accommodations industry, essentially invented a new category of short-term lodging. Yes, we need hotels, but hotels are also limited to highly consolidated areas with a lot of people in it, right? Airbnb, I could probably find multiple Airbnbs in the middle of nowhere to hopefully never be bothered again. Whether that's in Wyoming, New York, Montana, or whatever that traditional hotels can accommodate. So Airbnb serves a major purpose. They've grown hugely nationally, hugely internationally. And, like I said before, they reported 11% revenue growth to $2.75 billion. The issue with that is that was the slowest growth that they've experienced in the last 2 years, but it slightly did beat estimates. And net income, which we mentioned before, fell due to an increase in income taxes from a release in a valuation allowance, an increase in stock-based compensation, and sales and marketing spending weighed on profits. Now, at the end of the day, they're reinvesting back into the company on marketing and advertising and stock-based compensation. You want to keep people happy there that work there. Well, I'm sure a bulk of that went to executives, but the net income fluctuates, and their cash flow actually increased very well. So cash flow is the core number that you do want to look at. And after, as I said before, after the sell-off, they're valued at $70 billion, which is the cheapest the company's ever been. And they reported $4.3 billion in trailing cash flow. Based on free cash flow, they're trading at a multiple of 16. And with EBITDA, giving it a multiple of 18, which, again, they have growth potential, right? Regardless, of what happens here in America, which we're going to have a slowdown and we're going to have growth again, and interest rates are going to come down, which I'm not a proponent of. I think that's a bad idea. It's going to cause inflation to go through the roof. Inflation is not under control. As a matter of fact, if they actually paid attention to the inflation numbers, they would raise rates, not lower them. But anyway, Airbnb still has a massive market to penetrate. The company sees a large opportunity in bringing penetration rates in countries like Japan, Spain, and Italy up to those of the most mature markets, like those in the US, UK, France, Canada, and Australia. While the pullback is still understandable, their competitive strengths remain intact. Right? Another company, Bookings.com, was actually crushed recently. They had much worse earnings announcements. So I would say over the long term, Airbnb has potential. They're going to make money. They're going to continue to make money. They're going to continue to have free cash flow. To me, it's still too pricey from a valuation standpoint. If I were to buy it, which I'm not going to at this point because I feel like it's going to come down more. I feel like the U.S. economy is going to crash more. The stock market has to come down more. Everything is at bubble levels. But if it did go down substantially, I would buy it. And if I bought it and it went down more, I would buy more. And if you feel like it's, good, do whatever you want to do. I'm just some dude on the internet who happens to have some fancy initials after my name, but I'm not a financial advisor. I don't do, investments. I'm not allowed to, other than my own investments, which I have in the stock market, obviously, and some real estate. So anyway, if you found this helpful or informative, please be sure to like, comment, and subscribe. If you're into any type of, if you'd like me to film any videos on anything in particular, just let me know, and hope you have a great rest of the day. Thanks.